Hello and welcome to this very special pre-budget show, street view of what the street expects to come in the budget print and the budget fine print and how it could impact the markets more importantly. I'm Neeraj Shah with Aisha Faridi, and we've got two very special guests to talk about what should you as an average trader or as an investor expect from the budget. Nilesh Shah as well as Nirmal Jain need no introduction. Both the gentlemen join us right now on the show. Gentlemen, thanks so much for joining in. Nilesh, let me start off with you first. Is this a make or break budget this time around, or do you think it will be just one of those budgets and will pass through as any other normal day?
No, Neeraj, this will be a make or break budget because market is expecting a good budget. Market is expecting finance minister to be like Harry Potter and weave his magic wand to overcome near-term uncertainties. On one side, it is expecting finance minister to cut tax rates so that consumers can go and spend. It is also expecting finance minister to spend money on infrastructure development, especially road, railway and healthcare. And it is also expecting finance minister to honor path of fiscal prudence. So these are conflicting objectives requiring innovation, and whether we like it or not, but today's equity market and debt market are pricing that finance minister will be innovative in presenting the budget.
Nirmal, I want to get you in on the discussion as well. If the finance minister does manage to skip the fiscal consolidation part, which the FRBM panel has indeed recommended, do you think that would act as a huge disappointment for the market?
I think market will look at what does he do by not focusing on consolidation. So if he allows fiscal deficit to go higher, is he really doing something for growth and not only for public sector spending but also to kickstart private sector investment cycle, which actually has been quite disappointing for a prolonged time period now. So from market's point of view, there are factors that can balance sentimentally the negativity created by some slippage on the consolidation side. But at this point in time, I think it makes sense to focus on growth, and there will always be people in the market, they might be very conservative and say that walk the tightrope of fiscal discipline, and at the same time developing in a growing economy like ours can afford some slippage which is within the band and not just going out of control, but achieving much higher goals for growth, social equity and all round removal of poverty as well as accelerating the growth. So I think it's one has to see that what are the other factors which are important for market along with this.
The other number, Nirmal, which everyone over here is extremely fascinated with, is the fiscal deficit number. What's the number in your mind that would disappoint the market?
I think, okay, maybe from bad number will be anywhere going closer to 5% will be bad.
So, Nilesh, if the income tax slabs are revised positively, do you think that money will find its way into the equity markets either via direct investment or via buying companies which are listed, and therefore the earnings go up and therefore the markets move up?
I think consumer spending money will create its own growth momentum, and that growth momentum will ultimately result and reflect into higher savings. Our focus should be to increase the pie of GDP. Then as a percentage of that savings number, even if they remain constant, in absolute terms it will be a larger amount. So my feeling is that by cutting tax slabs, we will be able to spur consumption, which will increase GDP, and that may not result into relative increase in savings rate, but definitely there will be absolute amount increase.
But Nilesh, do you expect major changes to tax slabs?
My feeling is that if finance minister is innovative in plugging the loopholes and expanding the tax net, then the minimum exemption limit can be increased substantially, or the tax slabs at the lower level can be brought down substantially. In terms of tax compliance, our tax to GDP ratio remains at African country level rather than at Asian country level. We need to improve it, and this time we have a great opportunity. By virtue of demonetization, entire cash or majority of cash has come back into bank accounts. We can use data analytics and modern technology to go after the people who have deposited cash but not paid tax on it. The second thing is related to plugging the loopholes, and purely from a capital market point of view, if we see, we have concepts of bonus stripping, we have zero coupon debentures which convert interest income into exempt long-term capital gains. We have exemption available to promoters when they sell their listed company shares. We have BD, tobacco product, which is not necessarily taxed at the same level as, let's say, cigarette, and there is a scope for expansion over there. So there are multiple ways in which we can either plug the loopholes or expand the tax net and thereby create the room whereby existing taxpayers can be given some amount of benefit.
Nirmal, if the long-term capital gains treatment is revised, either in terms of the tenor being extended or a rate being brought in, how big a negative impact could it have on the markets?
So I think in what form and in which format it comes is very important to see. But there's a Prime Minister made a comment about stock market, people making a lot of profits and gains and not paying taxes, which was followed by finance minister's clarification that this should not be interpreted as tax on long-term capital gain. Market is sensitive about this, but market is at the same time will be rational about it. What is important to recollect is that securities transaction tax was introduced in lieu of removal of long-term capital gain tax or having a benign tax structure on capital gains tax. So it will not be fair to continue with STT and still bring in long-term capital gains tax. But at the same time, what can be done is that it can be removed from very illiquid scripts where a lot of tax planning happens, which is unfortunate. Also, the other second alternative is it may levy with beyond a particular threshold, like they did in dividend, that above 10 lakh rupees or above a particular level will be taxed. And the third alternative is it may be made 2 years or 3 years. So it's very difficult to see that what is the change. But what you have to look at it, there are so many variables that are important for market: fiscal deficit, long-term capital gain tax, corporate tax rates, individual tax rate, the booster for private sector investment. So one will have to look at complete package, because there will be few negatives, few positives, and on balance how market takes it. We'll have to see as it comes. But also at the backdrop, we should know that liquidity, particularly from the domestic sources, is very, very strong. A lot of money is flowing into mutual fund and now also life insurance. So there is enough money in the market to chase the stocks. And also interest rates are falling. So, there will be tendency for investors to allocate more assets to equity. So, the bias of the market will be to take positive news, more favorably, unless something is really, really big negative.
Nilesh, what are the top 2 market-linked announcements that you're expecting from the Finance Minister on Feb 1st?
I think the biggest number which market will watch is the fiscal deficit. On 29th Feb 2016, when Finance Minister honored the commitment of fiscal deficit at 3.5% of GDP, against all the guys saying that relax the deficit target, market made the bottom. Now, in the same breath, Finance Minister also guided for 3% fiscal deficit to GDP for FY 2018. What number Finance Minister deliver will definitely have a bigger impact on both equity and debt market. The second thing which market will be watching forward, and this will be more near term, will be, is there a change in the taxation system? At the NISM meet, Prime Minister did talk about levying fair tax on the capital market. Now, clearly when we say fairness, it means the domestic investors and foreign investors should be on the same platform. Today, foreign investors enjoy lower short-term capital gain tax than the domestic investors. Certainly, we should believe in Atithi Devo Bhava, but that should be for tourism, not for investment. The second thing is related to long-term capital gain. I mean, clearly when exemption was given for long-term capital gain in equity market, it was intended for retail investors, and it has been given to virtually everyone. So care should be taken to cap the long-term capital gain exemption rather than removing it completely, because that has resulted into increased domestic participation in capital market, which is the need of the hour.
So Nilesh, the corporate tax cut will be a big bonus. The question is, if the exemptions that are given to corporate India are taken away, Will that take the sheen of the corporate tax rate cut?
So again, the question comes to tax compliance. Today, corporate India's average tax rate is probably between 20 to 25% depending upon which number you take. Now, the myriad exemptions have ensured that the average tax rates have remained far below maximum marginal rate. If we can improve compliance, we have ability to cut corporate tax rates and at the same time retain certain critical exemptions. So the focus should be on compliance, compliance and compliance, and then retain certain critical benefits while simplifying this benefit structure.
Nirmal, there seems to be a lot of thrust that this government has on housing finance companies, and the market positioning as well has been in that light. What to your mind could come about in the budget this time for this particular segment?
So I think at least this government has been consistent in its policy and its vision for getting housing for all by 2022 and that's very ambitious goal. And in fact, housing, if you really look at it, there can be a much sustained boom in housing sector. So if we are not talking about few quarters, but we can talk about few decades actually. So if you look at the US economy when it was growing, it was the housing or the mortgage sector which was one of the key drivers. Even when the Chinese economy was growing at a rapid pace in 80s, 90s and later, housing was one big contributor of that. So housing sector can actually contribute to economic growth, employment, as well as serves the social purpose of getting housing for more people. And there are a number of things, all of them what you discussed, what he brings in this budget, I can't comment on that, but few things should be expected, and I think there'll be continuous doses or maybe further liberalization of incentives and reforms for housing sector. So whether it happens on land acquisition, whether it happens on taxes for the individuals or subvention or the limit for subvention, which is Prime Minister announced, whether that is increased. So all those things can happen, and a few of these things will certainly happen.
Okay, analyze what broadly to expect from the budget this time, but a whole lot of other sectors where the government's thrust could be possible in this budget is left to discuss. So we're going to do that exactly after this very quick break.
Back on Street View for the budget 2017, and in conversation with Nilesh Shah and Nirmal Jain, and having discussed a lot of specific pockets, Nilesh, we can't not discuss PSU banks, the recapitalization amount. There is a roadmap out there. And everybody expects that there will be an increase to the amount that has been given. What if the increase is marginal? Will that disappoint the street? And in contrast, if indeed the increase is much higher, does it bring the PSU banks back in the game, or will the market continue to prefer the private banks?
So PSU banks today are suffering from various limitations. Capital is just one of them. Administrative freedom is also another thing. I mean, today they have restriction in terms of how much they can pay, how they can retain expertise within the same department rather than transfer after 3 years or 5 years. So they need a lot of exemption or a lot of freeway on the administrative side apart from capital. But obviously budget can only tackle capital issue. If they provide adequate capital to PSU bank, I think that will be the need of the hour. In some sense, the way we look at demonetization, the benefit of demonetization comes when you can move money from Tijori into bank deposits and have the benefit of multiplier effect. The money multiplier today is upwards of 7 in Indian economy. Even if I assume 5 times money multiplier over 24 months, 5 lakh crore moved from Tijori to bank account will create an impact of 25 lakh crore. Now that impact is not possible unless until bankers go and lend, and PSU banks will not go to lend unless until they get capital benefit as well as administrative freedom.
Nirmal, there's big expectation in the market that perhaps oil cess will be reduced to 10% from the current 20%. Will this immediately drive a lot of interest in oil PSUs?
There is for interest in oil PSUs, but the benefit will be a lot more felt by consumers and the industry in general, because as the oil prices fell from $130, $140 to $50, significant part of this benefit was not passed on to consumer or not passed on to the industry. So there will be some benefit for oil PSUs, but they work in a competitive environment, and whatever price fall, they have to pass it on to consumers. So I think there will be some benefit for oil PSUs, but a lot more benefit will happen for broader economy.
Nilesh, what about the agrarian push? Because a lot of thrust is being given to this as well. A lot of expectations riding high. What can the finance minister realistically deliver in order to give the agrarian economy a push?
I think on the agriculture side, there was a study published in Economic Times which talked about post-harvest loss of upwards of 95,000 crore last year, which was a straight and simple loss to the farmer. Now 95,000 crore is a big amount. Why do we lose so much post-harvest every year? It's happening because our transportation system is not appropriate. We don't have roads which are connecting villages to the mandis to the cities. We also don't have cold storage or appropriate warehousing facility. I think if we can focus upon warehousing facility and connectivity, then to a great extent we can save this post-harvest loss, which will be addition to the bottom line of the farmer. So in this budget, I expect some amount of focus on the village road connectivity, and we have an excellent scheme in Pradhan Mantri Gram Sadak Yojana, and I also expect some amount of incentives given for cold storage and appropriate warehousing facility.
So as a follow-up, Nilesh, I mean, do you think people should look at spaces where the farmers will spend their money, or do you think people should look at spaces which will aid the farmer income?
This is entire chain available to you. If farmers become prosperous, then people who lend to them will also have better business. People who consume their product also will have better business. And people who give input to the farmer from seeds to fertilizers will also have better business. And more importantly, 70% of Indian population which is acquainted or which is engaged in agriculture and rural activity, if they become prosperous, the country becomes prosperous.
Nirmal, the other big story, of course, is infra, and there is a lot of talk of reintroduction of infra bonds. If that happens, or if there is some other thrust done, can it restart the infrastructure story in the Indian listed space?
So infra stocks were beaten down a lot between 2009 and 2014, 2015. So I think every infra stock will be different, because in terms of debt structure, in terms of capability to do certain projects. And India is perhaps the only large country that can absorb investment in infrastructure for a very long time to come and generate decent return on investment. So if there is something positive for infra bonds, some of the infra stocks will definitely be positively impacted, and market will also react to that.
Nilesh, what about autos as a sector? The scrappage policy, of course, is something that is being talked about, although the finances may not permit so. What is your expectation? What is going to come about for this sector?
I think India is becoming an automobile hub. We are becoming a bigger market than most of the other Asian nations. And we are also now exporting automobiles. Automobile and auto component has created a substantial benefit to the GDP in terms of growth contribution and employment. I think we should let this industry continue to grow on its own. Of course, we have to control environmental issues, but at the same time, we should let this industry flourish, because the contribution it's making to GDP in terms of employment, growth, exports, it's fantastic.
So Nirmal, final thoughts. If Nirmal Jain had to recommend 3 top suggestions to the finance minister, what would they be?
I would say that cut down the corporate tax rate to 25%, because that is what his promised roadmap or vision was, although it may be a little before time, but in the wake of demonetization and everything else that's happening around, I think that will be one big thing to do, because that will boost the sentiment and will also go very well with making tax compliance and removing black money, because you have incentive for people who want to pay tax, that now tax rates are lower. Second will be, I think, again, I'm not such a great votary for fiscal discipline to a very strict and a tight line. I'll say that invest aggressively in growth, and also give some boosters for private sector investment. That's the second thing. And third is, of course, reduce the individual tax rates also, and maybe at the lower slabs, increase the slab to 5 lakh rupees or 10 lakh rupees, which looks a little dramatic, but that will boost the consumer sentiment, and that has cascading impact on the entire economy.
And Nilesh, a similar question to you. You've known to make some creative suggestions. What would your top 2 suggestions be to the finance minister?
So one thing is related to compliance, because when 4 lakh people pay tax above 5 lakh rupee and 40 lakh people go and buy automobile costing average of 5 lakh rupee, there is a huge improvement, there is a huge scope. Now we know there is a fair amount of black money in real estate. The government must retain the power to buy out those real estate which they believe is not declared at fair market value. Earlier we had this provision, it was working well, and then it was dropped out for variety of reasons. I think if we can engage a private agency to enforce this provision, whereby any underdeclared real estate can be bought by that agency on behalf of government, and whenever they liquidate that real estate and they make money, they should be incentivized on that account. If we can put this mechanism, this menace of black money in real estate will disappear. The presumptive power of government to buy underdeclared assets will make people compliant, and to a great extent we will see merger of parallel economy with mainline economy. The second thing is related to, again, taxation simplicity. We have multiple entities like AOPs, trusts, LLPs. They create a myriad amount of complex taxation structures to avoid paying tax. I think it's important to simplify the tax structure and introduce taxation like estate duty, which is prevalent even in America, whereby it will help raise money for government, and second, bring down inequality in the society.
Okay, and with that, it's a wrap on this leg of the Street View. Hopefully the budget delivers and we all see the continuation of the bull market. Thanks so much for watching this show.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.